So one of my YouTube subscribers asked me a question saying, uh, how many open positions should I have in my portfolio at any given point in time? And the second question he asked is, let's say my normal position size is 5%. Does that mean I can own 20 stocks in my portfolio? Because 5% multiplied by 20 is equal to 100% portfolio exposure. So I wanted to address those two questions, fairly simple questions to address. Before I answer those two questions, let us look at the position sizes and the number of stocks that we can own. If my normal position size is 5%, maximum I can own is 20 positions. If my normal position size is 6.25, I can own 16 positions. The product of these two is 100%. So if 12.5% is my normal position size, I can own 8 stocks. For 20%, I can own 5 stocks, and 25% I can own 4 stocks. That is the mathematics. Okay. Coming to the first question, how many open positions should I hold in my portfolio at any given point in time? Well, we cannot decide that on our own. We have to allow the market conditions to decide that for us. So, if I give you an example, if the market remains in a confirmed downtrend for a period of 2 to 3 months, you know that during those 2 to 3 months, you are not allowed to take a swing trade or a positional trade, which means what? Which means uh, you are not going to hold any positions in your portfolio during that confirmed downtrend. Now, William O'Neill recommends that you should own like 20-25% of your portfolio in stocks. The remaining 50 to 75% should remain in cash. Even though that 25% of your portfolio, which is exposed to the market, I feel that on that 25%, the stop loss should be at break even, because the risk of losing money is higher than the risk of earning money when the market is in a confirmed downtrend. Okay, so we have to allow the market to decide that for us. That is number one. We cannot decide how many positions we can own. If the market begins to weaken, I have to start reducing the number of positions I have, or I have to start reducing the position size that I have in each stock. Okay. So that is the answer to the first question. We cannot decide that. We have to allow the market to decide that. Second point I want to make is, even if the market is in a confirmed uptrend, that doesn't mean that we increase our number of stocks that we have in our portfolio. The confirmed uptrend should coincide with stocks forming proper basis on the right side. Okay, with in the confirmed stage 2 uptrend. If that is not happening, I am not going to increase my exposure to the market. So a lot depends on market conditions. A lot depends on how many stocks are actually forming proper tight bases on the right side. That will decide. So allow the market to decide how much you are exposed to the market. Allow the stock to decide how much position size you can take in that particular stock. Okay. So position size and portfolio exposure are two different things. If my position size is 10%, and if I buy 3 stocks, then my exposure is 30%. My cash position is 70%. I have made a video on uh, 5 different terms that I wanted to discuss: uh, position size, position risk, portfolio exposure, and cash position. These are the 5 terms that you should know. If you go back to my YouTube channel, I think few weeks ago, 7 8 weeks, 3 or 4 weeks ago, I had made those videos where I had discussed these 5 things. So please have a look at those videos. You need to understand those 5 terms, because that is what I am discussing here. So that's the answer to the first question. How many open positions should I have in my portfolio? Let the market decide. I don't know. In fact, in a confirmed downtrend, I prefer to sit 100% on cash. I don't even put 75% in cash. I don't even keep 20-25% in the market. I don't want to take unnecessary risk. Why to take unnecessary risk when the index itself is below the 200-day simple moving average? Do you think you can make money in that market? Chances are very low. In such cases, the probability of losing money is more than the probability of earning money. So why not just sit on cash, relax, wait for the market to recover, then form bases. And when market recover, generally stocks form bases together. Okay. So there will be a lot of opportunities when the markets recover. But as long as the market remains in a confirmed downtrend, I don't want to take unnecessary risk. Second question was, if my normal position size is 5%, does that mean I can own 20 positions in a stock? Well, theoretically, 20 positions in my portfolio. Well, theoretically you can, but practically that is not going to happen. How will that happen? It can only happen when you get 20 setups in a particular day, where 20 stocks break out in a single day and you end up putting 5% in each of those 20. Or maybe in a very short period of time, let's say in 1 week, you end up buying 5% each in 20 different stocks. That practically does not happen, because by the time you buy the 14th stock or the 17th stock or the 19th stock, your first stock that you bought, that might have already matured in a sense. That stock might have already gone up and started showing technical sell signals after it had gone up from your yellow line. And some of those stocks that you bought before your 14th stock, some of those stocks might have hit your stop loss as well. So some stocks will hit your stop loss. Some stocks will reach a level where reduction in position size or outright selling is warranted. Some things will happen when you buy a stock, things will happen which might require you to sell the stock or reduce your position size in the stock. So there will never come a time when you will own 20 positions in your portfolio. That is not going to happen, because by the time you buy the second stock, something has happened to the first stock. Maybe you want to sell, or maybe you want to add to that stock. Remember pyramiding. So if you're taking a 5% position size, and if you buy one stock twice at base 2 and base 3, that's a 10% position. How can you have 20 positions then? Those two positions combined becomes one position, right? So that is practically never going to happen. It has never happened with me. Always some portion of your portfolio will always be in cash. Okay. And we need that cash to seize opportunities. When a great opportunity comes, when a stock meets almost all of your criteria, the liquidity, the comparative, the technical, the fundamental, and that stock looks superior to all other stocks in your portfolio, that's a stock where you can go in with big position size. Okay. You can control the overall portfolio risk by keeping your stop loss tight. For example, if you want to take a 20% position size in a stock, then rather than keeping 8% stop loss, why not keep the stop loss at 4%? So your total risk now is 0.8%, right? 20% multiplied by 4% is equal to 0.8%. Rather than buying 10% position size with a 8% stop loss, it's the same thing as buying 20% position size with a 4% stop loss. The total portfolio risk is the same. The only risk is volatility risk. Okay. That could be managed if you already made money on your previous 3-4 trades in a confirmed uptrend. You could take a bigger position size on your next trade. Okay. So things will happen in the market which will force you to come out of a stock, okay, or reduce your position size, or allow you to take a more position in the same stock. So you'll never end up owning 20 stocks in your portfolio at any given point in time. It depends on the market conditions. It depends on how stocks are moving in your portfolio. Imagine you buy 10 stocks and suddenly the market goes from confirmed uptrend to uptrend under pressure. Well, now what do you do? Or suddenly the market goes to confirmed downtrend. Well, now what do you do? You have to reduce the number of stocks in your portfolio, right? So that's the answer to those two questions. The summary is, allow the market to decide how much position size and portfolio exposure to take. Allow the base of the stock to decide what kind of a trade you want to take with what position size. Is it a swing trade, positional trade? If when you decide whether it's a swing trade or a positional trade, what position size you should enter it with, that will depend on the market conditions. Thank you so much.